Project cost management. The object of cost management is to complete the project on time and within approved budget. Nearly all projects have budget problems, and IT projects have a very poor track record. There are three main processes when it comes to project cost management: determining budget, estimating costs, and controlling costs. The four basic principles are profits, which is the difference between the amount earned and the amount spent in buying, operating, and producing something; profit margin, the amount by which revenue from sales exceeds costs in a business; life cycle costs, which is the sum of all recurring and one-time costs of the full lifespan or a specified period of a good, service, structure, or system; cash flow analysis, which is an examination of a company's cash inflows and outflows during a specific period; planning cost management. Cost management plan can be informal and broad, or formal and detailed. Cost management plans include the level of accuracy, or how things will be rounded, the units of measure, such as labor hours or days, the organizational procedures links, which refers to the work breakdown structure, or WBS, control thresholds, which defines thresholds for when cost variations have grown to a level where action is necessary, rules of performance measurement, reporting formats, which describe the format and frequency of cost reports required for the project, and process descriptions, which describe how to perform all of the cost management processes. Cost estimates. Cost estimate data involves the skill level of people needed, the number of people needed, hours required, special software or equipment needed, and other requirements. Rough order of magnitude estimates are estimates of what a project will cost that are taken 3 to 5 years from the project completion. The accuracy will be from -50 to plus 100% of the actual project costs. These are also referred to as ballpark estimates. Budgetary estimates are used to allocate money into organization's budget. These are made 1 to 3 years prior to project completion. They are accurate to -10 to plus 25% of the actual project costs. Definitive estimates are the most accurate of the three estimate types and are accurate to -5 to plus 10% of the actual project cost. These are used for making purchasing decisions and are made 1 year or less prior to the project completion. Cost estimating methods. Analogous or top-down methods use actual costs of previous similar projects as a basis for estimating the cost of the current project. These are less accurate than other estimating methods. The bottom-up methods estimate the cost of individual work items or activities and sum them to get a total. Work package leader may be asked to produce or estimate his or her work package. The three-point method produces an estimate by estimating the most likely, optimistic, and pessimistic costs for items in a project. Then, using a formula like PERT, these three estimates are used to formulate a consolidated estimate. The parametric method produces an estimate by quantifying every aspect of a project into parameters. These parameters are then used in a formula to calculate a cost. Example parameters may include lines of code, level of expertise, and size and complexity of data. Budget and preparing costs. Cost budgeting is allocating the overall cost estimate to individual work activities. Cost budgeting is determined by the inputs, tools and techniques, and outputs. The process of determining a budget process requires the following inputs. Cost management plan. This plan describes how the project costs will be managed and controlled. A scope baseline. A scope baseline is a component of the project management plan and includes the project descriptions, acceptance criteria, key deliverables, project boundaries, assumptions, and constraints about the project. Activity cost estimates. These are outputs that are established in estimating costs. Basis of estimates. Any basic assumptions dealing with the inclusion or exclusion of indirect costs in the project budget will be specified in this input. Project schedule. The project schedule includes a planned start and end date for each activity as well as resources required. Resource calendars. These provide information on which resources are assigned to the project and when they are assigned. Risk register. This is used to aggregate costs for risk responses to obtain the contingency reserves for the project. Agreements. This is an output of the procurement management process, but like the other cost budget inputs, applicable contract information and costs relating to project services or results that have been purchased are included when determining the budget. Organizational process assets. These are the processes or process-related assets that can be used in the process, including existing formal and informal cost budgeting related policies, procedures, and guidelines, as well as cost budgeting tools and reporting methods. When determining budget output, you should understand the following process. Cost performance baseline. This specifies what costs will be incurred and when. Project funding requirements. These are derived from the cost baseline described above and need to reflect the cash flow needs of the project, including management reserves and contingencies. Project document updates. These include the activity cost estimates, risk register, and project schedule. Controlling costs. Controlling costs includes monitoring cost performance, ensuring only proper charges are applied to the project, and informing stakeholders of authorized changes. Earned value management involves scope, time, and cost data. Project managers can determine completion, budget status, and give time estimates for completion. Earned value, or EV, is the estimate of the value of physical work. Below are equations that are used with earned value to find things like cost variance, schedule variance, and you can learn things like when the project will be completed and if the project will be completed on budget. Project management software. Project cost management software is designed to seamlessly integrate with project management tasks as a financial solution to create real-time status information about project time and cost at your fingertips. To enhance time-cost capabilities, the software reduces the amount of manual calculations required while creating a platform that can assign costs to resources and tasks, prepare cost estimates, develop cost budgets, and monitor cost performance. To provide users with snapshots of the overall project status, sophisticated reports on cash flow, budget, over-budget task, over-budget resources, and earned value statements can be generated from the system.